About this time on Tuesdays, we talk to our buddy Aaron at Fagan Associates about financial stuff. We got something important to talk about. How you doing, Aaron?
I'm doing great. How are you?
I am good. We're back from vacation here and now getting back in the swing of things. And, got to look at serious stuff like inflation. A lot of people are talking about this right now. Prices are going up, and some people are worried about it. Some people aren't worried about it. So what's your take on it?
Yeah, it's one of those words that we've been in such a low inflation environment for so long. I think people are just used to no inflation, and when you see something, like this, where everyone's seeing, home prices rise, lumber prices rise, consumer prices rise, they're like, hey, what's going on? This hasn't happened in forever.
Yeah, is this a good thing? Is it a temporary thing? Is it a long-term thing? I mean, gas prices are up, grocery prices. We saw you mentioned lumber, how it went up and then it went down, so it's all very confusing.
Yeah, I think it's one of those things that you kind of have to, we're coming out of a pandemic too, so, we have all these economists and the Fed coming out with these year-over-year numbers, and, they're kind of hard to interpret because a year ago we were in the midst of a pandemic. So, what I'm thinking is that some of this some of it's transitory inflation and some of it's not. So some of it's temporary, and I think some of it might be here to stay for a little bit because it's hard to, let's say lumber prices went from, $400 per 1,000 feet to $1,700. Now they're at $7. If these lumber companies are like, all right, people will buy them at $500, let's say. So I think the prices will go back down, but who knows if they'll go back down to pre-pandemic levels.
Okay. So what can if the government steps in, how do they impact inflation when it gets too high, and what is too high?
That's a question for economists, let's say. But what's too high would be above the 3 to 4% range of average inflation. So like a rolling inflation of above 3%, I think people could get a little bit nervous about. We're about the 5-6% range for this year, but we're also coming out of COVID.
Okay.
So what they could do is they could stop buying bonds, which would put less money into the economy. So they could do things like that. It's called bond tapering. So I think you could see that eventually. But I don't think the Fed wants to act too quickly. I think they're going to be more reactive as opposed to proactive.
Okay. All right. And will this have an impact like on interest rates and things? I know if you save money in a bank, you get like nothing right now. And,
If interest rates start to head up, you could see the Fed, do specific measures. They're doing a lot of experimentation, but I definitely think you could see some bond tapering. So that's something that they could do. But I really think the Fed wants everyone to participate coming out of this. So I think they really want to see wages increase for the lower income earners, for the minimum wage earners before they start doing anything. I think this is their chance to have an all-inclusive, rally in our economy. And for everyone to participate, as opposed to just specific sectors or income classes.
Okay, so you're not concerned about this then?
I'm not too concerned about it for the most part. Where we're seeing inflation is there was a lot of money in the economy. So I think you're going to see some temporary inflation. But if we're around the 2 to 3% range over the long term in the next 1, 2, 3 years, I think that's a success.
Okay. All right, we're talking to Aaron at Fagan Associates, filling us in on the inflation concerns today. I know I saw something, too, with during the pandemic, and even with people, temporarily out of work or whatever, that savings were at an all-time high, or at least, much higher than it had been for a long time. So is that part of the cause?
Yeah, exactly. That's part of the cause, and I think, a lot of people got money that didn't necessarily need it, but I think the government was like, hey, I'd rather put too much money into the economy than too few dollars into the economy. Okay. So I think, and you're also seeing, debt down, personal debt down, which is a good thing, too. So, hopefully where inflation is shown, it's for people that can afford the higher prices, like the median price of a home, but some things could be here to stay too.
Okay. Well, if you have any questions on your personal finances, how do they get in touch with you guys, Aaron?
Yeah, you can give us a call at 518-279-1044. We have a contact page on our website. It's faganasset.com. Or you can like us on LinkedIn or Facebook, or reach out those ways as well.
All right, perfect. Well, appreciate your talking us off another financial ledge.
Yep, and I'm glad we could help.
All right, we'll talk to you next week.
All right, thanks a lot, Randy.
Yep. Bye-bye.
This is 99.5 The River.